Merry Christmas, everyone. This is my last video that I'm doing for the year, and then I'm going to be retiring and enjoying the holidays. Well, whilst we're at it, this is a video that's going to cover volume analysis. I think in some of the posts that I've been doing online, I've kind of deviated away from volume analysis, so I'm going to kind of bring it back to volume analysis, so everyone kind of understands how we can potentially use volume to our advantage when we're trading or we're running a day trade. Now, I've used volume for quite some time, and yeah, it's been very successful from a trading perspective. And I wouldn't trade intraday with anything else. It's just what it is. You know, your win ratio goes up incredibly. I mean, you might have to do some different position sizing to just accommodate risk, because when using volume and you pick a position, you tend to have a lot of volatility around where you enter the trade. So I think it's really important that something else kind of gets done in terms of how the actual position gets managed. And yeah, so basically that's it. So let's take a look. Right, let's just get into the meat of everything here. So we're looking at a 1 hour chart of cable, sterling dollar, and first and foremost, I mean, we can kind of zoom out a little bit so we can get an idea of where we are in the price action. Because it's an hourly chart, we're currently in a range, so it just looks really awkward right now. So we can't really see much in terms of plot out some basic resistance and support, which is what we're going to do now. So we're going to find that significant low and that significant high, and we assume that price is trading within this range at the moment. Of course, a breakout of this range could potentially mean a good thing, but we'd have to look back in time frames just to see where the higher resistance and support levels are. But because we're intraday traders, we're mainly concerned with the short-term movements, so we're not really concerned with the larger cycle. I personally now trade a lot more larger cycles, but I still haven't forgot the art of trading within the smaller time frames. So what we're going to do, we're kind of going to look at what volume does, and I'm going to bear certain rules in mind. So I'm going to do some kind of drawing. So when we see volume declining along with, say, a price move that is moving from a high position to a low position, we assume this is kind of weak. This is a weak bearish move, right? And it's gonna at some point be followed by some kind of buying, or would see a certain degree of volatility. And then when we get a decent up move on volume, that is essentially with a solid down move, we can assume this is a valid move, and we'll get a greater reaction from this particular move here. So what we got is a move that was moving from top to bottom with a lot of volatility and very weak candles as it proceeded down. So essentially volume was falling off as price was falling, which says that there's not a lot of participation from the selling perspective, i.e. it's the likelihood that there was just a lot of profit taken from these guys here, and that's what we were seeing reflected here. And it's pretty weak, so we can see this is very small volume, and we also know that this lower volume is generally volume that's generated by retail trades, because they're smaller relative to the more large and voluminous trades that take place in the interbank market. So in this case, we're looking at this and assuming that volume's falling off, and it's not a move we're willing to join just now. But then we see volume start to pick up as the move carries on, and we get a rise in volume, right? And we see the same picture here. See prices are, we see volume falling off, we see a rise in price. Again, this is a suggestion that this is a weak move, and it's essentially market maker activity. We continue to see the same thing, a good markup as our volume continues to fall on this side, right? And then we see some selling coming in right on top here, and that has generally a slightly rising volume, and then we can see that reflected here with the fall. So this would be a good move to kind of follow, get involved in, and then we get a fall in volume, again characterized by a slight rise in price, which again suggests that this is a weak buying move. So this is a general premise of using volume when you're looking at grouping candles. Now let's look at using volume in terms of using it with individual candles. So I'm going to delete this all off so we can start again. So we get the general idea in terms of following the overall price movement based on the volume that's happening. So getting rid of all these lines. Yeah, there we go. Alright, so I'm getting rid of all these lines, and yeah, let's look at it now. Let's bring the chart in again. Now right here we get some really good volume, so we're going to create a baseline for our volume. So we're going to assume, right, let's just use this line here. So any volume above, let's say right here, is probably volume that's kind of pretty high. So actually let's raise the bar a little bit. Actually, I've got a better idea. Let us use this indicator, which is a volume indicator, but it pops up on the chart instead. So let's use this volume indicator instead. This should give us some parameters as well to work with. So according to my volume chart, this is pretty much representative of a baseline, sort of median in the volume. So all volume up this zone will be considered high volume and one to pay attention to, and likely to be generated by a large institution or a group of institutions who are particularly in the know, and they're buying at this particular level or selling at that particular level. So let's look at what price does. So first and foremost, what we're going to do is we're going to observe what price does at these levels. So we've got a spike here, we've got a rising volume spike, so volume pushes in and it's rising. Now let's look at it relative to top to bottom. So right here is a low and this is a high. So we see an awful lot of volume centered around the lows. First we get rising volume with this bearish movement running in, so we say it's a good movement. Then we hit lower and then we get another spike in volume, and then right on the open of this candle here we get even massive volume to characterize this bullish movement. Now we first have to look at where are we relative to the benchmark, which the high is here. We're at a low point. So just based on the idea of buying and selling things, would you prefer to buy something at a higher price, or would you prefer to buy at a lower price? Well, I personally would prefer to buy it at a lower price. So we're going to look at the actual lows that happened. So we actually look at the low was at 156.08, so that was the absolute low of that candle and likely of this entire session here, because we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So there's about 17 hours. So we've got 17 hours of trading. Price comes this low and we get this volume spike right above normal. So this is our normal baseline, it's above normal. This tells us that, well, we can see it's a bearish candle. We see the activities immense in that bearish candle and the price is marked lower. We see that volume was picking up as it was moving lower, and then we get this spike here. So I'm going to make the natural assumption that people were happy to sell at this top, so they joined the move up until this point, and it started to roll. We started to see the volume fall off. It starts to pick up at this pause again, and we see a lot of tail action, right? So there's indecision, it rolls down, and then we get this candle, which is very slim, and then we get a high volume bar, which is almost heading to our normal bracket, and we get this sort of spread. And then we see this again, we see the spread increase, we see the volume increase. Okay, it looks good, and then we wait, and then we get this massive bullish bar followed by this volume. Again, if we look at the low, at this point the low is 156. So I'm going to think these two bars have a lot more buyers in them than they do have sellers. So at this point, when I see this bar, my next cue is to wait for the open and potentially buy at the open, because I've seen a volume spike, and I'm pretty confident after seeing all this price action that the people who took this they took it at a low price. So the buyers here that generated this volume were happy with buying at the low of 156, and it's decent volume to accompany the buying. So we see the price push up, and we know that as relative to this candle we see a similar low of 156.08. So I know that, well, people are not going to be so happy to be selling at this particular point, which is 156.18, when the good high point was actually 157.47. So I mean, they'll probably wait for this as a good potential area to sell. So any volume on the low side stands to reason is potentially buying. So we get this move. I would look at this point probably to buy at the close of this candle, seeing this volume, that's a good bullish move. And I now understand that these guys are probably they're just trapped more than anything else. I could do that, or I could wait to see the reaction on this candle. So we get lower volume, considerably lower volume at this high, which was 156.75. So people weren't interested in selling at this high. Price moved lower, closed round about here. So it closed at roughly about 156.40, and it's less than 50% of the previous bullish movement. This is a good signal for me to buy. So the close of this cancel, I enter my buy order here at 156.18, which is just roughly about 8 pips from the actual low, from 56, well 10 pips from about 56.08, and again an 18 pips from the low. So it's a good kind of median range to kind of get in. So I get in here and I place a buy order. So price struggles, it rolls against me for a little bit, struggles here, rolls against me, close it at roughly 156.30 and starts to move upwards. All the time I'm observing the volume. So I'm seeing with the bearish movement, the volume is lower and lower and lower as we're considering these highs now. We push into this low. I'm just going to check and then see, well, what were buyers thinking about this low. They weren't any interested anymore because they'd rather take this low to move, so they're quite happy. So once I've entered in this here, I'm looking to get my stops, preferably beneath this support, because I know that the market will be interested in these lows, seeing this actual area of support in the past. So I'm going to get my stops below this sort of level, 155.13. So I have to adjust my position size in. I'm day trading, so there's no way I'm going to be able to get in this market and escape the volatility without having to stop slightly wider out. So what I'm going to do is just calculate the pippage, and then I'm going to use that. So I'm going to use the dollar amount I'm willing to risk and divide it by the pippage to get my actual position size. And then I'm going to start now waiting. So I've got my stops in place, and then the market starts to roll higher. The volume's low as it goes, and there's very little participation at this point. Market's still rolling, but I know that these guys are leading the price action because there's been a lot of bullish entries here, and these guys are leading the price action. We've got a volume spike relative to all the other volume activity, so I know that there are a lot of institutional money here as well. So these guys are going to guide the market for some time anyway. So they're in, everyone's locked in, and the price keeps moving, and it goes higher, and then we get this pullback, and then we get this mass volatility. So the market pulls into a low of 156.07, so it's just a pip off the previous low, and boom, shoots back up again. Pushes a high very close to this high here. We get a reaction, 157.23 relative to 156.46. We get a reaction, but it's not much. The bulls hold it. And then we see an indecision candle very briefly, but it closes at a higher level. And it puts in a low that a lot of people are going to be interested in at 156.83. So we check the volume against that, and we realize that, well, there's not much going on. But check the volume before. Look at the volume spike again. Above normal, we can simply assume that because the price was so low at 156.08, it's in our low region. So there were a lot of buyers involved here. So what the market maker has done, he's tested the market. He's tried to find out where interest lies the most, because that's where he's going to be interested in. And as far as this session goes, interest is on the low side. So we get a pull up, and then the market rolls up quite nicely back into that high. So it places this high. So if we look back in the past, it could be potentially a significant high, and it is. Relatively, it is a significant high. There was a lot of action there. So again, we mark that. Market pushes in and puts this high in, and then we get some selling. So we're going to see what the volume is in relation to that selling, and guess what? You get a massive volume spike associated with a high of 157.84. So now the market's put itself in a little range, and we know this is the high and that's the absolute low. So we know 156 is kind of where the market looks at the moment, and 157.84 is where the market looked to kind of push it. So again, we see it rolling down with a lot of selling, and however the volume starts to fall off. So we're a bit dubious at this point. We want to see decent volume to move this market. Well, this doesn't actually come in here. So if you'd sold here, you'd still be in profit, but I wouldn't want to sell right now. I'll wait. So come into, this is likely a morning session, mid-morning. So come in here, we see a lot of action. We know that these guys were still in control from the top side, and then we get a reaction round about here. So we get some good volume, on the top side relative to this. So we start seeing volume seeping in, it starts to rise in, and then we get this reaction here, and then we get finally that above